Okay, Brian, you've been pursuing a digital strategy for some time now. A lot of talk about it this week, actually, with all the earnings. Give us your sense overall of the role of digital in Bank of America's future.
Well, in the broadest strokes, we are a high-touch, high-tech company, so digital is part of the strategy, but it has to be incorporated with our relationship management businesses, think the private bank or Merrill or the commercial bank or the trading businesses. So, and also all our branches, 300,000 or 400,000 people come to our branches. So it's a combined strategy. But why digital is so important, it's from the customer interface, it's from how employees can work together, and then how the customers can receive the goods and services, how they buy them, how they interact with us. So it makes us tremendously efficient and a great client experience, which is a pretty good thing.
There's a lot of talk right now about particularly the big banks investing in digital. I know you've been investing for some time. I think your number is around $3.5 billion a year. Is it as steady as you go? Do you expect that to continue into the future or ramp up?
Well, it's always changing as to what we spend it on. It's a gross amount of money, which is a pretty good size amount of money. So when people talk about $3.5 billion for us, that means literally incremental new products and services and new capabilities. So it's a lot of money. To run the platform's another $10 or $12 billion. It just goes on every day. But what are we investing in? Greater capabilities. So Erica, to our consumer clients, is huge, but we can keep increasing the functionality. So year over year, we had a fourfold increase in the fourth quarter of 20 versus 21 of people using Erica, not because Erica, it had a growth in customers, but really came from people using it more and more. Or in Zelle, getting it more easily accessible through a widget that's called. Those are the types of things we're doing. And then on the institutional side, Cash Pro, which is the way companies move money, 240% more engagements by customers. They can see everything in a portal-type app as opposed to a bunch of different systems. These are just core executions we drive through the platform.
I believe you passed a roadmap mark this actually quarter in Zelle actually having more transactions than your checking accounts do. I believe I read that. If true, give us a sense overall in your business. Will that continue to progress? I mean, at some point, does digital eat the entire bank?
Well, so what happened with Zelle is we keep track of the checks written by our customers. So you sitting down and writing a check out and handing it, putting it in the mail to pay a bill or to hand it to somebody, that's down 24% over the last couple of years. And Zelle's been growing at 50 to 100% a year. So the numbers of transactions by Zelle is actually exceeded the number of checks written by our consumer customers. That was a milestone because it shows you what's really happening is that Zelle is eating into those low balance checks. And so if you look at the dollar amount of checks written, not the number of transactions, the dollar amount's actually up a little bit. So less checks of higher amounts to $2,000 checks versus $20 checks, and those low checks are being taken over by Zelle, which is good because it's easier for the clients to move money to each other. It's easy, instead of giving your son or daughter a check, David, you just Zelle them the money, and the volume of Zelle now exceeds Venmo overall in the industry, and I think we're basically equal to Venmo in terms of transactions on a quarterly basis. So we're driving that through, but it's really convenient. But that is a big milestone to think that what you and I grew up with, David, is the way to get money out of the bank was to write a check and hand it to somebody, and then they could negotiate that check, has now gone to where you can just say, give me your cell phone number, and you pay them. That's pretty good.
It's extraordinary development, certainly for somebody of my age. That's right, Brian. Give me a sense, as you look at the digital strategy going forward, how much of this is basically doing a form of the business you've been doing? For example, Zelle replacing checks, as opposed to actually moving into new businesses, potentially with new customers?
Well, I think if you look on the wealth management business, the financial advisory team we have at Merrill and the private bankers we have, they're core to what we do for clients. But if you think about what happened during the pandemic, the ability for us to get information to clients and deliver our insights to clients through Zoom and WebEx and other types of meetings allowed us to get out to clients in a very intimate setting, one-to-one, but through the screen many more times. So you enabled your reach of those teammates, but behind the scenes also just think of the investment products. Like our Life Events investment product has 7 million users now who are loading in a financial plan, a life event plan for them, and it keeps them on par and moving forward on task, showing them what's happening. If they save this much, they want to save for this purpose. What are their priorities? Is that a new product? No, an advisor did that for years. But is it enablement to allow an advisor to add more value to the insight and knowledge they have as opposed to putting the stuff in a financial planning module or doing calculations on spreadsheets? So, as you think about these, yes, some are very new products. Zelle's a new way to move money. Others are, digital embodiments of old products, but allow you to have reach and access and capabilities far different. And that's pretty fun and interesting.
Are there customers that you will reach through digital that you would never have reached through Bank of America? Or is it basically that customer base that, of course, you're always trying to grow?
Yeah, we have basic things. We have more to do. We can do with every customer because we have the best capabilities of anybody in the market. And if a customer simply does, has a product with us and does something with somebody else, we're not serving them well because we're the best. Therefore, they should do it with us. So that's our basic principle. But on the other hand, we can gather customers. So if you think about it in the consumer side, especially as we've been going into new markets, say Pittsburgh or Columbus or Cleveland, Cincinnati or Salt Lake or Denver, Minneapolis, that we've opened up in with branches. When we go in there, we go in digital first, and we'll have 10, 20,000 checking accounts going before we ever open the first branch. So those customers can can work with us completely digitally, and it works. And so, but we firmly believe it's a high touch, high tech. At some point, most customers on the consumer side come to the branch. All the relationship manager customers, the core interface is through a person, a financial advisor, a commercial banker, but enablement helps. And so you have to think about this as a combined strategy of high touch, high tech. So yes, we get customers digitally only. That happens all day long. But at the end of the day, what makes us special, we have the best digital capabilities, plus we have the physical capabilities with them.
Brian, as you say, you've invested a lot of money, continue to invest a lot, you've made a lot of progress. At the same time, do you envision possibly a major acquisition in this area to really take you forward? Because you said the sky is unlimited in how far you can go with digital.
So we've done major acquisition would be off the table probably in a lot of ways because it just does a business model work with each other. But we have done an acquisition like in healthcare technology space. We did something to enable the payment side. So around payments, we bought back our joint venture on the merchant side a couple years ago. That was a $2 billion transaction, and now we've put $300 million in a new system to drive that. So we're always going to make acquisitions which complement our behaviors and also partner with companies or complement our capabilities and partner with companies. But the reality is we have 2.7 billion digital interactions in our consumer business last quarter. We have a huge business. We have 54 million digital customers that are accredited, and 41 million were active. We need to always be looking at what capabilities we need, and sometimes that's partner with providers and ideas that come in. But the reality is acquiring more customers is not what we're after right now. What we're after right now is driving the usage and the capabilities and people understanding what they can get from Bank of America's digital capabilities across the whole platform.
So just to that very point, Brian, when you come in every day or you go on your computer at home, how do you measure success when it comes to digital? What's on your dashboard?
So we look at the anchor product set in each client segment. So in the case of the consumers, it'd be the checking account, and the core transaction account in the household. Investors, the core transaction account and their investment account. Commercial banking clients, it's a loan and what they call GTS, Global Transaction Services. So we start from the core account, and then we measure literally the usage of all the other products and services and how they do it. So, we know, for example, with our retail, which is our general consumer client base, how many of them who deposited a check last month, quarter, whatever, deposited mobilely with mobile versus not, or at the ATM versus not. And what we're trying to do is drive that usage up, because once you have the checking account, the usage and the capabilities are what drives the satisfaction up. And then we look at how many people have a card and have they gotten it digitally or not digitally with us, and because a digital execution to get a person to use their card and activate their card and spend on it is much cheaper than other ways of acquiring cards. So we look at it everywhere. Merrill Edge clients into the Merrill team, because in the day they're self-advised. Client like yourselves would have a self-advised account and may have a financial advisor. We want both sides so we measure that. So we measure literally numbers of customers, anchor accounts, and then every single product set that they can use, and then how they even use that product set that they're enabled on.